The market may have bigger eggs to fry, though. Tomorrow at 8:30 a.m. Eastern, we get the release of the much-anticipated January jobs report. So with about 57 minutes left to trade, let's take it to the floor show. Get you prepared for everything. Live from the CBOE trading floor, Bullseye Option Chief Market Strategist Alan Nuckman and CFRA Research Chief Investment Strategist Sam Stovall. Sam, under normal circumstances, the January jobs report would take center stage, right? Does it now have to share that stage with the AI headlines, tariffs, and egg inflation?
Well, Liz, it also is going to share the headline with earnings, which are coming in much better than anticipated. Right now, expectations are for a near 13% year-on-year increase for fourth quarter earnings versus the less than 9% that had been anticipated at the end of the quarter. Also, I think that the employment data will be impeded by the LA fires. So as a result, I think some investors might sort of look at that and think that maybe those numbers will end up not representing the true employment picture.
Yeah, it's that employment picture. And by the way, the expectation is of about 170,000 jobs to be created in the month of January. As we look at that and everything else on people's plates, I guess, Alan, you are sitting there at the aorta of the heart of a lot of options trading. Right. What are you seeing there at the CBOE that gives you an indication that investors are interested in going in one direction or another? And which direction is that?
Well, for me, it's got to be price action. The way that the markets moved these last 2 Mondays consecutively, where we recovered those big news event losses, that just shows the overall resiliency of the markets. And those are some major snapbacks, and we've got momentum definitely to the upside. So if we can break out above those highs, we could get a quick move in the S&P to 6,500. And I'm looking at this like 2017 all over again. Politically and market-wise, and the market's rallied from 2,000 to 6,000 where we stand right now. So there's a lot of upside. The VIX is right now at 16, which is double that historic low in 2017. So I'm still very, very optimistic.
Yeah, but still below 20 for the VIX, right? It still shows a lot of complacency considering so much of the headline action that we're getting. So, Sam, you mentioned earnings, and it's true. So far, what we've gotten shows a pretty significant beat on expectations overall for S&P earnings, at least on profits. And yeah, I think it's a decent beat for revenues as well. But we occasionally will get a name, like whether it's Skyworks, for example, that gets hammered due to one piece of news that relates to maybe one of its biggest customers, Apple, which is now deciding to choose not just Skyworks for a key chip maker, but another name, and then suddenly a name goes south. How does an investor handle something like that?
Well, I think the investor going into the trade must realize that right now we are looking at a relatively pricey market. The S&P is trading at a 20% premium to just a 10-year average forward PE ratio and about 35% premium over the last 20 years. Tech is at a 33% premium over 10 years and nearly double that over the 20-year period. So I think investors need to realize that whatever growth we get in 2025 will likely not be the result of PE multiple expansion, but rather an improvement in earnings themselves. And we have been seeing a bit of an adjustment lower for the full year 2024 and for 2025. Estimates had been about 13 to 14% for 25 estimates. Now they're a shade below 11%.
I get it. And Alan, then you have names that come up that just are soaring, like Marriott, for example. So when you're looking at a hotelier, or Ralph Lauren came in with very strong numbers today, and that's a high-end retailer. It's bringing Tapestry along, another high-end retailer stock. So those two names indicate that the consumer is healthy. And we did get first-time jobless claims today. Okay, they were barely higher than expected, and nothing about what we see right now in the Ocado data screams recession. I'm just quoting Carl Weinberg of High Frequency Trading, a really smart guy I often read when it comes to econo data. But do you see anything? Are there any signals that the smart traders at the CBOE are turning tail anywhere?
No, again, it's about the way the markets react when they have these actions of profit taking. And we're a long ways away from recession. Obviously, there's going to be pulpit pressure to bring rates down. It looks like we're going to get another cut in March. So, things are very, very, very positive right now. But if you are concerned, the reason these markets over my shoulder are here, buy some S&P puts for June. Look at it like car insurance or house insurance, and you can sleep well at night, 10% out of the money. So it's very easy to hedge yourself instead of trying to time that turn. That's out of my price rate. I mean, out of my job description. So I'm still very, very positive. And you mentioned Nvidia's leading the day. Nvidia could easily fill in this gap from 130 to 140, and then if it does, we could get a full V recovery, and then that target's 180. So I don't think it's the end of Nvidia. We had a one-day, a couple days shakeout here, and it's still up 1,000% since 2022. So it's hard to predict the end of Nvidia, obviously.
Yeah, perspective for long-term investors. Nvidia right now at 127 and change. And Sam, I know you like McDonald's and UBS along with Cencora. McDonald's, you don't think it'll be affected by these skyrocketing egg prices?
Well, certainly it could be affected in the near term, but we think that the stock is going to be outperforming because of the value offerings on its menu and also better than expected same-store sales growth. So our belief is that, longer term, this is an outperformer.
Okay, McDonald's up 1.5%. It's outperforming today because the Dow at the moment, folks, is down 227 points. NASDAQ down 10. S&P down 3. Alan, Sam, great to see you. Thank you so much.
My pleasure.
Folks, we've got some stumbling blocks for Roblox investors. The stock is sinking at this